Hi, welcome to my Peter Lee's market prediction video. I'm Trader Peter Lee. I also go by the name of Trader Peter Pan. And today is 2017, January the 18th, at the 10:36 p.m. at night. So today's topic is the U.S. stock market, which includes Nasdaq Composite, S&P 500, and Dow Jones Industrial Average, is in a bull market, and this bull market will last 2 to 5 more years, which means ending in the year of 2019 to 2023. We are in the phase 2 of the bull market from Dow Jones Dow theory, and this prediction has an 88% chance of being successful. So, but before going into my video, please look at our full disclaimer. It's in its entirety. Failure to do so is in violation to our term of service and shouldn't be using our service. So actually, I haven't been doing any videos for a while, and just update on some of the things I've done for my website. I actually found a domain for my website, for my blog, which is Trader Peter Lee. So you can just going to either my Facebook, YouTube here, or my Facebook page. You'll be able to this button here. You will be able to go straight to my blog site, which is also my web page. So today's topic. We are just some brief introduction. So this market prediction as primary target is for the huge institutional funds or investors or family offices. But if you like my materials, and you it's also welcome for you to watch it too. And we are a free service that uses my method to analyze stocks and stock markets, and also I'm a global macro analyst or a trader. So looking at here is some brief some of our you can say policy, or some of our goal, my goal, So I won't talk too much there. So yeah, because English is not my first language, so please excuse my English, but I'm trying my best. Okay, so for this analysis, which is I'm saying the U.S. stock market is in the bull market, and is in the phase 2 of the bull market, according to Dow theory, and this is have an 88% chance of being successful. So my Peter Lee rating for this stock market prediction will be success probability is 88%, and there's a 12% failure rate. So it's not a guarantee that my prediction will be successful. And I've written some of my thinking behind this prediction, but it is just part of my thinking. It's just a very brief analysis of my reasoning. If you want my full analysis or my thinking, you are welcome to email me, and my email is traderpeterlee@gmail.com. So like if you are a big institutional fund, or like family office, like we can maybe exchange ideas or something. I don't mind that. Okay, so my thinking is maybe half years ago, the This is the Nasdaq. So if you remember, like last year, I think is during the middle of the year, there was a very bearish view from quite a few people, and one of the most famous one is George Soros, and he was like painting a very pessimistic picture of the stock market. And then also Jim Rogers, like he was saying that there's too many liquidity and like too much borrowing going on, and it's very unhealthy to the whole stock market, something like that. So what I think is that what happened during the 2015 to 2016 is that, look at here, there's actually a consolidation between this from 2015 to the end of near to the middle of the 2016. And what happened here is that this consolidation actually retired or threw away a lot of the bearish people. And what happened is for me, my thinking is that it is possible that during this time, which is right here, it is quite possible there will be a big drop similar to the 1987 stock market crash. The magnitude maybe not as big as the 1987, but it's something like that. But this consolidation, which I shown here, actually replaces that crashes, and actually a lot of the bearish guy actually was shaken out, and then and then it just move up now. So because here during this time a lot of bearish people are like even some, as I said before, like George Soros, they are really bearish. And so if you look at this here, it's a little bit like a hand shoulder formation, and I guess well, they have their reasoning anyway. So this is my thinking. So actually it is quite it's lucky that we didn't have the 1987 kind of crash. Okay, so the second reasoning was because actually the internet sector, which include the major big companies such as Google, Facebook, Apple Computer, their earnings in these companies and the internet sector is very high, and they are increasing fastly increasing their earnings, which this kind of good companies attract of a lot of liquidity. And so what happened is because these are good earnings, so maybe those are big funds, maybe mutual funds are buying into them, and because they are the composite, like Nasdaq composite, one of the member of the index, so they actually push up the index. So this one of the reason, and also there's the technological advancement in the internet sector and other areas made possible that the global bear market disappear. So I guess at that time a lot of bearish people there, and then they think the bull market has ended. If you think about it, the bull market has already lasted for I think 7 years or something, 6 or 7 years, which is very long time. So one of the reasons people are thinking the bull market is ending, and also which is something that is quite unhealthy, is that there's too much liquidity, going around, and cheap credit, and every people are like borrowing money, which is like very unhealthy. So and then there's a lot of bearish people there. But for the internet sector, I think those are companies, very good companies, and their earnings are really good, and they are going to be good. The earnings will be good in this coming future too. Okay, the third reason I'm thinking about is because the money made by the big market player in the US market actually invest their earnings from the stock market into the technological companies and funding new startup that is profitable business. And this is a good thing. And lastly, and if we think about a long time ago, during the dot-com bubble, Alan Greenspan, the Federal Reserve chairman of the Federal Reserve at the time, Alan Greenspan was very optimistic and bullish during the dot-com bubble, and he was like thinking that this is the internet is the new economic model, and will fuel the bull market continuously. But that never happened, and actually it was a bubble, and everybody know what happened next. So there's a crash. I mean, it's a crash, and a major bear market came. So, but this time around, because the internet new economy business model, which Alan Greenspan envisioned during the dot-com bubble, which is like 20-something years ago. But this time, this new economy business model is real. And because the earnings are good, and this economy business model also drives the economic growth, and this will also fuel the bull market of the US equity market. Okay, so this is all my brief thinking of mine, and as I said, it's just some of my thinking, but it's not like just part of it. And if you are really interested in knowing what I'm thinking, you can email me. As I said, I welcome any insightful people, or even like big hedge fund, or big mutual fund people, or like family office people to exchange ideas with me if you like. So before I go, it is paramount that you do your own due diligence before making any decision and declaration of interest. Me, Peter Lee, currently does not own or hold any US equity stocks at this present moment. Okay, so thanks for watching. See you guys. I don't know when will I do a global macro analysis again. And also, I will be doing primarily English language videos and Mandarin English video from now on. So if you are you as English speaking people, you can listen. I'll be doing English for you guys. So thanks for watching. Anything can email me if you like. Okay, thank you. Bye bye.